Now, if you pull up the last 1 month graph of Sanghvi Movers, you know what I'm talking about. There's a big surge coming in on that particular stock as PMS guys are lapping it up. And Rishi Sanghvi is joining us on the show to talk more about that. Rishi, the big area which seemed to be improving a lot in terms of financial is the way your debt is coming down. What's the roadmap from here on after reducing it quite substantially as well in the last 2-3 years?
As you rightly mentioned, we have repaid approximately 110 crores per year for the last 3 years. In 2018, our debt was 542 crores, and we have brought that down to 197 crores at the start of this financial year. So this represents we have halved our debt to equity ratio from 0.69 to 0.28. Now, with the existing cash flows from the current business, we are confident that we will be able to repay all the debt on the balance sheet, which is not more than 150 crores by the next 18 months. So on average, our debt obligation for the next 3 years is 50 crores per year. And we're confident that we can repay this within the next 18 months and become a debt-free company.
So how exactly is your profitability likely to improve because of this reduction in debt? And if you could give some color on your cash flows?
Rightly so, because as soon as we become debt-free, my EBITDA is equal to my free cash flows, because we are a capital-intensive business with a very huge asset base and depreciation being a non-cash expense. My EBITDA is virtually equal to my free cash flows at the bottom line. If at all, when I break even, then my EBITDA is equal to my free cash flows. So we foresee that the reduction in debt and the improving top line will definitely have a very large impact on our profitability going forward.
Give us some visibility, Rishi, on how business is looking from here on once your focus on these two metrics has been spoken about, but what's the road ahead?
So this financial year, we already have a secured order book of 172 crores. And we foresee that we are expected to achieve an average utilization of more than 70% in this financial year. So we see that we would be doing significantly better than what we did last year.
So what exactly have you tried to achieve in financial year 21 on the business front? And also if you could talk to us about what will the goal be for FY22?
So FY21, as everyone is very well aware, was a pandemic year where as far as we were concerned, several mega infrastructure projects stalled and the demand for cranes was very sluggish. So we have optimized ourselves and utilized that time to strengthen our ties with the customer. And we have spent a lot of time with them to see what are their pain points and how Sanghvi Movers as a company can fulfill them. We have also invested a lot of our time and energy at the management level to optimize our cost base. If you look at the last 2 years, we have demonstrated a double-digit year-on-year growth in our EBITDA margins. And looking forward, all the initiatives, all the cost controls, all the improvements on our cost base will have a long-term impact on our ability to maintain our cost base and improve our EBITDA margins. So if FY21 was a year of consolidation and also improving our cost center, FY22 is all about exploration and unlocking our potential and value that we provide to the economy and India at large. So we are on the verge, as I mentioned earlier, of being a debt-free company, which is a remarkable achievement for a capital-intensive business such as us. At the same time, as we are getting debt-free, we are exploring a number of growth avenues going forward, be it strategic partnerships by way of JVs, internationalizing our business, or being focused on providing additional value-added services to our customers. So this year and next year is a year of exploration where we can build upon our growth story, add significantly more value to our customers, internationalize our business, and look for strategic partnerships by way of JVs or tie-ups to enhance our scope of services within India.
Rishi, before we wrap out and end our interaction, just tell us about the new business areas which you also have in mind, some sort of a forward integration from current crane business, and how exactly will you be funding the capex also, because we understand you have big capex plans, addition to capex going forward.
So currently, we are looking at international markets where we can extend our crane services. Typically, a company of India has a lower operating cost structure as compared to foreign rental players. So we are now the 5th largest crane rental company in the world, and we benchmark our safety and quality standards to our international peers who are larger than us. So we believe that these quality services at a lower cost base can be taken into international markets, and we are exploring them, be it the Far East or the Middle East or even the Indian subcontinent. So these are the three regions of the world where we see mega infrastructure projects coming up, or specific sectors having a thrust, whereby the demand for cranes is high and Sanghvi Movers with its existing fleet of cranes can cater to. The second thing that we are looking at is to leverage our brand recognition in the construction equipment services and our ties to more than 40 to 50 prominent companies in India, to go back to them and say, what are your pain points when you execute mega infrastructure projects, and how is it that Sanghvi Movers can solve those pain points, thereby bringing down the customer's cost and, more importantly, the downtime or the delay in achieving the project completion or the capex completion on their side. So we are looking for strategic partners, foreign partners, to come with us to the Indian market, whereby we can leverage these connections with the customer, leverage our brand, and also leverage our know-how, technical know-how, logistics network, in order to support companies in India with additional services. So for the first 18 months, we are focused on becoming debt-free. And as and when our plans for the internationalization or the strategic tie-ups or the value-added services, these are the three areas we are exploring. As they firm up, it depends on the nature of the partnership. For example, whether it is capital or technical know-how, or in terms of expertise or equipment that our strategic partner would provide. But further down the line, the existing businesses' cash flows can be utilized or may be utilized for these expansion plans.
All right, Rishi, we'll let you go on that one. Good luck for all the plans on growth front.